Morning everyone and welcome to today's morning report on Tuesday the 8th of December with me, Rich Perry, market analyst at Hantec Markets. European trading sessions got off to just a bit of a drab start really. The market's been dragged lower by the continued downside pressure that we're seeing on commodity prices really. The oil price hitting a 6-year low yesterday. Let me just show you. First of all, that's the dollar. Don't want that. Here's the oil price. Wow. Moving below that 37.75 on WTI yesterday, hitting a low of 37.50. And the weakness just continues really. It's just found a bit of support today, but very marginal, and that's just basically added to the doom and gloom on the equity markets in terms of the energy prices, which some of these stocks are falling. I mean the commodity indices, for example, within the sectors within commodity sectors within the indices, for example, at a sort of decade low, and some of these stocks, mining stocks, are still seriously under pressure as metals prices as well fallen away. That has certainly not been helped by the China data out overnight. The export-import data still very weak, declining both on exports and imports. The exports were slightly worse than expected at 6.8% negative, but the imports were slightly better. But generally, the picture is still pretty negative. The sort of move towards realigning the Chinese economy is ongoing, but still the data that comes out from China will affect those commodity prices, and that is still a big drag on those markets. In terms of Forex, well, you briefly saw the dollar. Well, what we have got is the dollar just giving back some of the gains that it's seen in the last couple of days, and that's sort of mainly due to the euro rebound. Bit of a rebound from that, from the lower big support, pivot support of around 108.10 on the euro. That held yesterday and sort of rallied off that, so that's interesting. But interesting that also that we're seeing the commodity prices, the commodity currencies are being dragged by the commodity price weakness. So the Aussie is quite strongly lower today. That's under pressure. That's my chart today. I'll talk about that in a bit. But certainly we are seeing that these commodity prices having an impact across asset classes. So today what we've got to look for? Well, we've got the UK industrial production at 9:30. And that is expected to just improve slightly to 1.2% on the year-on-year data, so still pretty reasonable on the industrial production, but not amazing for that number. And also we've got the JOLTS, the US jobs openings, JOLTS jobs openings today at 3 o'clock, and that is expected just to come back slightly to 5.5 million. So that is an indicator that the Fed does look at apparently. So that will be interesting there this afternoon. But generally speaking, it's still fairly quiet and probably just trading off the oil price weakness and also the Chinese data that we've got today, or we had today. So that takes me to my chart today, which is the Aussie. And I talked about the Aussie last week as it hit this trend line and rallied. I talked about the prospect of this trend line actually breaking down. I was looking at the fact that we've got these momentum indicators that are beginning to roll over, and that is now even more pronounced than what we've seen in the last couple of days. Is the commodity price weakness really starting to hit through? Today, again, we're seeing that broken trend line. Not only that, look at this RSI. I've been taking this RSI as a key indicator recently. I think that anything where we see the RSI back below 50, you're seeing the sentiment turning more negative, more corrective, and that seems to be the case now. We're also seeing the MACD lines rolling over, and also the stochastics looking to sort of fall away and start to confirm that sell signal. So it looks as though the momentum is building for this breakdown of this uptrend channel, pretty decent uptrend channel as well, and that would certainly reopen the reaction low that we have at 71.70. But if that were to be breached, then we're sort of back at these levels. If I get the crosshair going, back at these levels that we saw back from late October, mid-November, around 70.60. So a closing breakdown of that trend channel would certainly put these supports under pressure. Now, what we've seen in the last hour or so is the acceleration to the downside. We've actually seen a move back towards 72 figure. 72 figure tends to be, or has tended to be, a pretty reasonable I wouldn't say it's amazing. It's a reasonable sort of pivot line on this chart. So it's sort of, again, it's sort of a gauge really, 72 figure, a gauge of the sentiment. But the main support starts to come in around that 71.60, 71.70 mark, which was sort of last week's low at 71.70, but below that 71.60 was also a reaction low in late November. So a couple of levels to work with there. You don't need that anymore. That's gone. So yeah, and that is certainly now seems to be that this uptrend channel has broken the uptrend has broken the channel. That doesn't even make sense. The decline has broken the uptrend channel, and the momentum is becoming more negative. Look at the hourly RSI back below 30. And that suggests we're breaking this channel down. MACD line's lowest since early November. Also the stochastic sort of more sort of camping down in the negative territory. So we are breaking down this uptrend channel, and it looks to be that we're going to be testing this support at 71.70, possibly lower as well. So I wish you good luck in your trading. Oh, hold on, resistance levels. Well, you'd certainly say that this sort of between 72.70 and 72.80 is a pivot level. Old high, new old high was a support. That will become resistance again, but at the moment we're about 70 ticks away from that, so just under 1% away, so still quite high. But if this RSI begins to unwind a little bit, maybe that would be giving you a nice little chance to sell. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.